All right. Trading date is 12/19 on the Friday. I'm just gonna go over Friday's price action and the trades I took to make 4,000 for today. So, first thing I always do, mark out my fib, and mark out my imbalances and buy side and sell side liquidity. Right. So I have everything marked out, so we don't have to go through it. But here's our first imbalance range, right? All I did was take my fib from the low to the high, right? And I just took this whole range and just made it a box so it wouldn't interrupt with anything else. And then our buy side, which I guess we don't have, I guess. But our buy side liquidity, we have these, that one doesn't get hit, but you get the gist. Okay, yeah, and then sell side. Okay. All right, let's go back to market open. All right. So we have market open. We mark out our fibs of the ranges, the most recent ranges, right? So we have, get rid of these. We have this high to this low. This is our first range, right? That gives us our OTE for this imbalance. And then we mark out our second range from this low to this high. This high, I believe, right? Eight. I think it was this body close. The body right there. Okay, there we go. To the highest high right there. And then basically gives us our OTE, which is our optimal trade entry zones, right? And it also gives us our ranges. I also mark out just this candle from the wick to wick. No. This one. This low to this high. And that gives us our London high, I believe. Right here. This should be up here. Our London high. Alright. Okay. So first thing you notice, I'm gonna get rid of this one so we don't get too much interruption, right? First thing that I see is our range down here and our imbalance. Then we have our 1 minute sell side liquidities right here and right here. So we'll just mark out the lower quadrant one. Right. That's what I noticed. And I also noticed that we have all these relatively close sell sides, right? So we could just mark the middle of that, but that really doesn't matter to me. Just the most recent for now. Okay. So what I'm looking for price to do is tab my OTE and respect it. Right? Here's what it did. Keeps on bouncing, And then off this second bounce, I got in a trade and I aimed for our second range that was imbalanced, right? And it was this OTE to this high. Now, I don't think I took the low or the short from this, but I did take this long. So I took this long and this long. 200 points only for each, right? So That's just from pre-market into market open. Now, here's the other thing that you need to know. If we mark out our fib from here to body, just about body, we get our Asia high on the 4 fib. Wick to the wick actually. It's finicky, but from wick to wick, and then we get our Asia high at negative 3.25, just about, right? And it's also in between our negative 3.5. As we know, our range, that's where usually market tends to struggle. If it doesn't break through it, that's where it will struggle. Now, so we also create a new range right here, right? Our new OTE range. So I'm gonna get rid of all this so you guys could focus. But the first thing you look at, right? So we have this high that's created previously, and this gets swept. Oh, whoops. This gets swept. Swept, right? Or there's a sweep, whatever you want to say. And then there's also this low that was made. And this is also swept. All right. And you guys, as you guys know, this is how it looks technically. We have this, that, and that. Right. So this is our sweep of this high, or you could even say we swept right here. This high that was made, right? You could also say we swept this. Right? So we have our range here, and then we have our manipulation from this wick to this body close. Right? Now, this is our range. Here's our OTE zone at 0.618. All we do is we wait. I think I got rid of my indicator. Oh shoot. Yeah. Got rid of my indicator. 1 second. Okay. So we have our our OTE range. So you just wait. Wait until you get tapped. And boom. We get tapped. And this is our long. I didn't take this because right here is when I was asleep. But you could have took this long anywhere you wanted to, honestly. We have... Why is my fibs like not... Or my lines not lined up? We have London High from here. Boom. London High. Okay. Then we also make another fib, right? Because there's another range here. So I'll get rid of this. And we can see that it swept liquidity and it broke these lows right here. And this high right here. Right. So our fib goes to the next highest high. And then we go ahead and mark out sweep and sweep. Right? And here's the pattern. We have this high being made, this low being made after it gets swept, and then it sweeps with this candle. Boom. Right? Okay, yeah, right. Okay, then we have our next OTE range here. We wait, and we get tapped. Right? This is a trade that I did take for 200 points. I always take 200 points unless I know for sure where we're gonna go. But you can also say this, look. So we swept London lows, right? And we're respecting our sell side liquidity, meaning we're generating more sell side for a bigger move later on, right? Now it won't be today, because as you see, it won't be. Like we'll check up on it, but all we've been doing, right, is just generating liquidity down at these lows, generating liquidity, but we're moving higher. Okay, we get one final fake sweep, right? Creates this SMT. Right. Oh. Creates this SMT. Meaning it's not gonna go lower than this, right? So you could have took this all the way to our buy side liquidity, wherever we had that at. Where's our most recent 1 minute? So we have, oh yeah, this white line right here. Let's change this to buy side. So we have this buy side liquidity that we have. So you could have took this all the way up here, right? I just took it for 200 points or 206. Right. Now we get to 9 o'clock, right? 9 o'clock to 9:30 and 10 o'clock. So here in this zone, you want to see manipulation, right? You want to see manipulation to the upside. That way you could take shorts down. But as you can see, we actually get a manipulation down, right? We get a manipulation down, and we actually start pushing forward, pushing higher, right? Meaning there's no way that market is going to go down any more than here. Plus we made a SMT. Okay. Now keeping that in mind, where's our? So we have our 3.5 and 3.25 zone from our first OTE, or yeah, our first range. I just marked out this as our struggle range, and that's what it did. It struggled. We also have a lot of fibs here, so I'm gonna get rid of some so you guys can see. Okay. We also have our -4 from this manipulation range, and that basically marks out our high of the day, right? Then if we take a look at our 10 o'clock, we get a high push with this manipulation wick. So what I did was I mark out the wick to the body close, and we have another OTE range right here, right? I didn't take this trade because I didn't think it would hit that. Instead, I took this long. This long was only for 280-ish points, I believe, on this candle. Right? Because I thought that our highest range, our next highest range would be this this one right here, I believe. So I actually try to take a short at this range with 50 points, and I was aiming for 200. But obviously, it didn't hit, so we'll exit out of that. That's our one loss for the day. Okay. So instead, you could have took it to our OTE range, and then get your full fill, and you could have took a sell at our OTE range. Let me get rid of the struggle zone. You could have took a sell here for around 200 points, right? It never hits, but it also never hits stop loss. Now, I wouldn't take this because this is right after New York lunch. So for me, anything in this zone, I don't trade. Because historically, New York lunch and New York PM, they just messed me up. But yeah, besides the point, I did take this one because I knew that we weren't going to go any lower than these, and we weren't going to go into a bearish movement. Now, this is all to keep in mind that I had this in mind because we still have this huge gap, and I wanted market to push towards it, right? I've been waiting for market to push towards this gap that we created on Thursday/Friday, and that's what it did. It also pushed towards these equal highs, but it never took it, right? So what I'm guessing is that we're gonna drop a little bit and then go back up, fill this range, and then the rest of the week start dropping probably. That, or it'll be the opposite, right? So just something to keep in mind. That's what I was. These longs were what I was waiting for. I didn't catch the whole movement like I wanted to, like right here, because I'm only trying to get $1,000 each day. That way I could get my first payout more easily with Apex. Okay. Now, get rid of this. I don't know what that's for. Oh, that was for the 1 minute highs over here. Okay. Now, I want you to keep in mind time. Right? We're going to go over time real quick. Market open, 6 o'clock. Okay. 7 o'clock. Okay. Let's take a look at those two real quick before you do anything. Market open, always volatile. Some type of volatile movement. 7 o'clock. Some type of market induced velocity or induced volatility. That's what induced volatility at 7 to 7:30. Okay. Asia open, always some type of volatility. Okay. 30-minute mark. Reverses. 30-minute mark. Reverses. 30-ish minute mark. Right here. Starts reversing. Then we have Asia open, obvious, or London open, volatility. Let's see. 30-ish minute mark. Starts reversing. 30-minute mark going up. 30-minute mark reversing. And then we have 8 o'clock. And then we have 9 o'clock, 9:30, some volatility. Okay. Now let's look at New York AM in session. 10:30 starts reversing. 11 o'clock starts reversing. New York lunch open starts reversing. Okay. New hour starts reversing. Okay. With this all in mind, and we have 12 o'clock. Where's 12 o'clock at? 12 o'clock right here. With all this in mind, right? What I'm trying to say is that if you're not getting the movement that you want in a span of 30 minutes, and you're in a trade that's not going in your favor, it's kind of 50-50 whether it reverses or continues, right? At that 30-minute mark. So I'm just trying to say that keep your like eyes on time, because time is a big factor when you're trading, right? This new hour open. Like, I was in this trade, I had my stop instantly at break even. As soon as we got this push, we pushed it back down, and we started pumping. Now, the only reason why I didn't get stopped out of this trade is because I have a rule where I go break even at 50% of 20 ticks or 200 ticks. Right? So at 200 ticks, I go break even, right? 75, I go to 25%, and at 100%, I start trailing 1 RR every time. All right, I don't even factor in any fair value gaps. Go break even, or I go 250. Now I've only been trading with one micro, right? And I've made 4K. Imagine that, right? 1, 2, 3. And I think there was one more somewhere. I think it was this long. This long right here. 4 trades, 1 loss, or 1 loss and 1 break even, I believe. I forgot where I went break even. But yeah, or it was this one. No. Yeah, it was this short and then this long that I did. Right? Just imagine that. All you need is 1 mini. And I'm up 4K. On the day. 1 mini. Nothing else to worry about. You either get 1K, you get 250, or you trail. Right? In this market, you don't want to be greedy. Right? If you don't have the capital, don't be greedy. There's no point. You're not gonna make any money. Now, I'm saying this because I've lost so much, and I've had to buy so many accounts, and I FOMO'd and I FOMO'd and I FOMO'd every time. Right? Now, keep in mind, I don't have a payout yet, but I will get there. Because I'm going to be consistent with this rule from now on, or from whenever I started using the fibs. Right? 1 to 4 RR with this rule. Right? Once I'm at 20K in my account balance, I will probably take 1 trade with 2 minis. Right? Once I'm at 50K in my account balance, I'll probably do 3 minis. Now imagine that. 1 to 4 RR with 3 minis. That's a lot of money. I think it's like whatever 3K. You get 3K, 3K risking 750, something like that, right?
ไอ้มึงใครพักกระตัวฮะ
Anyways, don't risk so much to where you can't get back. Because once you risk too much and you lose, you're gonna start FOMOing. Once you risk too much and make a lot, that's when you start FOMOing too. Why I say that? Because when you get a big win, your mind is set on, oh shit, I can make more big wins. But in trading, there's so many losses that you could take that you're never gonna have a green year, right? A green 6 months, a green 3 months, right? There's always gonna be a point where you lose, and if you're doing these big wins and you're depending on these big wins and you're risking so much, you're gonna start blowing more accounts. I know from experience, I've blown so many accounts that had on Top Step that had 10K, that had 8K, had 6K in the account, and I blew that all in one day because I was trying to win it back after one loss. Right? That also comes because I was using ICT and not understanding really too much. And not having a good risk management. Right. Now with this strategy, it's so easy to manage your risk because you just move, you trail, or you just move to 250 and you get out instantly at 1K. Like, or if you're up for the day, you could trail or get a higher aim for like either buy side liquidity, an imbalance, or going towards another OTE range. But yeah, basically, factor in risk management when you're trading. It's very, very helpful with your psychology. At least for me, with my psychology, right? Because I love trading. I love trading, meaning I love to spam trades. You can see 1, 2, 3, 4. I took 5, 6, 7 trades in one day. Now you might be saying like that's way too much, but some people, they just be spamming it even more than that without having any like remorse or any real confluences. They're just FOMOing. These are off my ranges that I've made. These are my confluences, right? And most of them hit. I'd say 70% of them hit. If you find the right range. If you find the right fib. Right? Now, I'm saying that, but let me see. Let me try to find a bad fib, right? So let's say you mark out your fib from, let me get rid of this. But we'll keep that OTE. So you mark out this fib, right? Oh, whoops. Mark out this fib. Instead of this high to where it broke structure, you mark it out to this high, or the highest high that we have, right? Boom, okay. We have our OTE range, assumed OTE range. Where's it at? Right there. Right, this is our assumed OTE range. And you're like, oh shit, it's kind of respecting it. Okay, just tap me in. Alright, so you have this long setup now. Well, this is a bad fib. Why? Because you didn't break structure at this high. You broke structure at this high. This body candle close. right? Not this one, because these are leveled at this candle close, right? That's where you broke structure. And that's how you mark the fib. But yeah. This would actually be right here. Right there. Right there. Which still helps. I was a few ticks off. But still hits, right? Anyways, basically, if you're gonna do the fib method, you don't have to worry about anything. You don't have to worry about fair value gaps. All you gotta know is where liquidity is resting, where imbalance of the ranges are, what ranges are. You need to know what time, and you need to know about manipulation. Right? Now, when you're trading ICT, you should already know about all of these. You have your 1010 macro, you have your 930 manipulation, you have like time macros that ICT teaches, I believe. And you should know, if you don't know about when market opens there's volatility induced, or how when there's news there's volatility induced, then you might need to research or do some more learning. Now, to mark out your ranges could get very hard, but as I showed you, you only want to do it to the body candle close after it breaks structure. There might be a good example somewhere. Okay, so we have this range, right? You might be saying, get rid of this. You might be saying, why did I mark it to this body high? Right? So we could mark it down here to this body high, right? Because it broke structure from here and here, right? That is what I did. So here's what I have. When I'm trading, I have these levels marked out for me like this. So here's my first level of when it broke structure. And then here's my second level, right? Because it breaks this structure. Breaks this high. Okay? So now I have my other level marked out as well. Now whatever it reacts off like more heavily, like you see how it wicks, that's where I enter. I enter the first one lighter contract size. And then the if it stops me out, say this I get stopped out with 50 ticks, right? It stops me out here. If I just move this down, then I wait for a better reaction, you just cut risk to that same body wick or whatever it was around that area. You just cut risk or size in less, right? First OTE range, you size in less. Second one, if it respects it more, you can size in more or just cut risk. That's going over that fib. But yeah, okay. I believe that's all I have to teach you. Yeah, the fibs really help with your risk management. It helps with being patient because you're waiting for your entry. And it also helps with marking out or leaving the trade early enough to where you get profits or you get stopped out with some profit. Now you could combine the fib with ICT and you could start partialing if you want, right? But the fib also helps you mark out your highs, right? And it helps you determine where market will struggle and where market might want to reach to, right? But yeah, just make sure if you're spamming the fibs, you're spamming the right ones. But yeah, that's it from me. Have a great weekend. Good luck in trading next week. If you FOMO'd and you didn't pass your account this week, hopefully you get it next week or by the end of this year. So you can start the new year fresh. If you don't worry about it. You'll still start the new year fresh with a new mindset, a new strategy you could adapt. If not, you don't have to. Just take what I'm saying and run with just the discipline, risk management, and taking into account imbalance and where liquidity will is resting. So you could have your daily bias set out for the day, right? You never want to stick to one bias on a lower time frame, right? On the bigger picture, you want to stick to the same bias if you understand how market moves, right? Like I said, there's no reason for us to go any lower because we're manipulating sell side liquidity, right? With all these lows, we're creating SMTs with the lows, so there's no reason to go lower. And whenever it's Friday, especially if it picks a direction, it'll usually stick with it. So if it's pumping, it'll stay pumped, or it'll pump and then accumulate for the next day, and then it'll pump again and then drop. But yes, as I said in my first video of this week, I think I was bullish on the week, right? On the week I'm bullish, meaning Monday or Sunday through Wednesday I will be bearish because those will be taking sell side, so market could push up. Now you could apply this same theory in your lower time frames, right? So let's take, for example, here, or let's take, for example, this, right? So we're taking buy sides in Asia and London, buy side liquidity and imbalances, so New York could drop. Right here, Asia, we're taking sell side liquidity and imbalances, so we could go up, right? And then we have Asia taking sell side liquidity or imbalance, and London taking sell side to go up, right? Now, say for example here, so we have Asia accumulating and London accumulating in an imbalance of an range. So market, what does it do? It expands. It then takes both buy and sell side liquidity. does Asia do? Accumulate. London takes sell side. New York retraces, takes buy side, and then drops. Right? Now, like I said, you could apply higher time frame to lower in that fashion, but lower time frame doesn't affect higher time frames. Higher time frames affect the lower. Just like how ICT like strategy is, higher time frame gaps are stronger than lower. As in, this fair value gap will be stronger than like a 1 minute gap, right? If you see we're inversing from this fair value gap on a 1 hour, you could assume that we're going to continue, right? Now it won't be the same for the 1 minute because the 1 minute doesn't have as much power as the higher time frame. So, all to say that basically if you see a 1 minute being disrespected, you can't always assume there's going to be a reversal here, right? Because in this fashion, what did it do? It didn't. Right? Now, I don't even use the higher time frame. Keep that in mind. I just know that the lower time frame gaps that are formed really don't matter. That's why I mark only my buy side and imbalances on the higher time frame 1 hour, and I just use 1 minute for my precise fib entries. All in all, that's it. Goodbye.